field of crowdfunding and alternative finance. You will notice that there is a cheat sheet next to your seat, and that is all from courtesy of Mark Roderick from Flaster, Greenberg. And Mark, as I've mentioned to him before, and I mean all the way to George Bush, everyone in our office uses this cheat sheet, and he's an incredible resource. He's the author of CrowdFundAttorney.com. Please join me in welcoming Mark Roderick. Thank you. There's one there.
Good morning, everyone. Good morning, Mr. Roderick.
Good morning.
So I might stand up here, I might come down and walk around a little the way Richard did. I know it's first thing in the morning, haven't quite got enough caffeine running through our veins yet, so I want to keep everyone awake, which is usually not what lawyers are really great at. I want to thank Andrea again for putting together another wonderful conference. She does a fantastic job. These things are not easy. It's like herding cats. But she and her staff just do a fantastic job, and we all appreciate it. Now, Richard, for those of you who know Dr. Swart, you know he's the data guy. Richard is facts and data. He and I had dinner recently in Philadelphia, and I asked him, "How's your steak, Richard?" And he said, "Well, 3 grams of sodium, 2 grams of fat." So that's Richard. In contrast, you're just going to hear from me pure speculation, which is more fun. As Andrea said, I'm Mark Roderick. I'm a crowdfunding lawyer, and what that means in my case is I am a boring corporate lawyer who has been representing entrepreneurs for 30 years and done thousands of deals and raised many hundreds of millions of dollars of capital. And then when I saw the Jobs Act on the horizon, I said, wow, this is huge, this is transformative, this is the biggest change in my career, really the biggest change since the Great Depression. So I'm going to learn everything there is to learn about it, and it's really paid off for me in the sense that it is turning out to be just as transformative as I thought, and I spend all my time these days in crowdfunding, representing lots of portals, lots of entrepreneurs raising money. It's a super fun and exciting business to be in. I get to spend all day, every day, dealing with really excited entrepreneurs, driven people, visionary people. So it is really a fantastic industry. I'm going to warn you, I'm going to speak for about 25 minutes, and I'm going to speak without a PowerPoint presentation. And that is going to require an incredible attention span on your part. So I don't do PowerPoints, but I do have this little crowdfunding cheat sheet that Andrea mentioned that each of you should have. This is something that I created for myself. It's just a little crib sheet about all the different kinds of crowdfunding, and I decided to put it on my blog one day, and it kind of went viral. The funny story that Andrea alluded to is I have a client, very large real estate developer, who was raising money for a very, very large real estate project in Minnesota, a big data warehouse. And so he was doing what you do, which is visiting family offices. Does that phrase ring a bell for those of you here? Family offices. Very wealthy families have sort of family-owned investment companies. So he's going from family to family, and he stops by the Bush Ranch to talk to George W. and his investment advisors, and my client's talking about crowdfunding, and George says, "What's that?" And my client pulls out my crowdfunding cheat sheet and starts going over it with President Bush, who was not interested in the details. That is both the punchline and true. But anyway, so my little crib sheet for myself has made it all the way to a former president of the United States. Before we get into any of those details, I do want to just do a brief overview to make sure we're all on the same page. And I want to emphasize something that Richard said very well. And that is, you know, what is crowdfunding? And as all of you, I'm sure, in this room know, there is the Kickstarter version of crowdfunding where you just donate money to people. And then there's the equity part of crowdfunding where you give money and you get something in return. And there are a lot of complicated details of my crowdfunding cheat sheet, and we just talked for wonderful hour after hour about all the legal regulations and so forth. But all crowdfunding is, okay, this is the big picture. This is the 101,000 foot picture. Crowdfunding is just the internet coming to the capital formation business. I think that is a very useful way to think about it, because everything else, all the legal stuff, is really just details. It's not just legal stuff, but the business models, you know, how do you make it work? What's your revenue model if you're a portal? How do you make it work if you're an issuer? Those are details, fascinating, hugely trillion-dollar important details. Thank you, Andrea. But they're just details. Crowdfunding is the internet coming to capital formation. And what does the internet do when it comes to industries? Well, we've seen it come to one industry after another. We've seen it come to the book-selling industry with Amazon. We've seen it come to the travel agency industry with Expedia and all of its progeny. But it comes to one industry after another, and what does it do? It transforms, it disrupts, it displaces middlemen, it displaces investment bankers and brokers and lawyers. The capital formation industry is a gigantic industry in this country, much, much bigger than the book-selling industry or the travel agency industry. So when the internet comes to this industry, it is a multi-trillion-dollar transformation. As I say, everything else is just details. Where are all the pieces going to end up? But if you think of crowdfunding as it's just Amazon. It's just the internet coming to a gigantic, inefficient industry. That's what we're talking about here during this conference. I also want to emphasize, because often at these conferences, we talk about crowdfunding only from one point of view. The point of view of the entrepreneur, the real estate developer seeking capital. We think about it as finance. How do you obtain capital? If you're a portal, how do you make money from the capital flow? But the critical point, which I think is too often ignored, is why is that capital becoming available? Why do investors want to invest? And I think the answer, if all of you sitting in this room have some investment assets, and if you're anything like me, and probably most investors over the last 20 years, investing really hasn't been very much fun, right? It's up and it's down. It sort of seems as if it's mostly down. And it's boring. There's nothing you can invest in. You know, you say, okay, now this time I'm going to make some good investment decisions. And you look out there and the investing landscape is bleak. There's the Vanguard Index 500 funds and these funds, and all of them move together, and you can't really diversify. It's bleak. The average investor, even the average accredited investor, even the average Google employee, doesn't get to invest in that deal that George Bush got to invest in. That's how capital works in this country today. The good deals belong to the, not the 1%, but the 0.1%. That's just how capitalism works in this country right now. And there is a huge pent-up desire in this country as well as Asia. Richard talked about the 3 billion members of the middle class. Well, they want to invest in those deals. Okay, so you can think of crowdfunding, and I often do. Crowdfunding is a pipeline, right? Just as the internet coming to book selling is a pipeline directly from Amazon to the consumer. No Barnes and Noble in between. Crowdfunding is a pipeline with, on one end, investors. The accredited investors in this country have something like $3 trillion of investable assets, some number like that. That's even putting aside the non-accredited investors. Trillions of dollars on one side, and that trillions of dollars is looking for somewhere to go, better than the Vanguard Index Fund. On the other side, you have entrepreneurs, you have developers. I always say that if you're talking to a real estate developer who's not asking for money, call 911 because he's not breathing. There's just a huge demand on the one side and a huge push on the other side. And there's this pipeline now, for the first time, it's been unblocked, and there's a trickle of capital starting to flow through. And that trickle is going to become larger and larger and larger, as time goes by, as the returns get validated. So we'll just now turn, because I am a lawyer, so I will talk very briefly about the details, and you can see it on the crowdfunding cheat sheet. I'm not going to go through it in great detail because we don't have the time, and you probably don't have the interest. But very briefly, what the legal landscape for crowdfunding looks like right now is we have Title II, thank goodness, Title II of the Jobs Act. That's general solicitation and advertising permitted only to accredited investors, okay? That is where almost all the activity that we talk about at these conferences has been going on. It's been legal for a year, huge amount of activity. This is what I spend all day, every day dealing with. So that's legal. We have Title III, which will involve non-accredited investors. That's not legal yet, pending SEC regulations, and many of us in the industry are skeptical about Title III because of its highly regulated and therefore highly costly mechanisms. We have Title IV, which promises to be better than Title III, but is also not yet legal pending final SEC regulations. We have states doing intrastate crowdfunding, and I completely agree with Richard. Interstate crowdfunding, interstate crowdfunding should die when and if we ever get Title III, and maybe even when and if we get Title IV. But right now, a lot of states are starting to adopt intrastate crowdfunding. I actually recently wrote a model law that all states can now adopt, so they'll all be the same, a model state interstate crowdfunding statute. So we will see where that goes. And then, so that's all the sort of Jobs Act crowdfunding flavors and categories. And then to top it all off, we have sites like Prosper. And some of you might have been wondering, well, where does Prosper fit into all of that? And the answer is they don't. They do something completely different from a legal point of view. They have registered their so-called platform notes with the SEC. They filed a big, thick document called an S-1. They have a prospectus that they have to supplement with each and every loan they do. So they have a wholly different legal structure. And Yeah, they can sell to non-accredited investors, but not in all states. So the whole legal stuff gets complicated. But as I said, don't get confused about that. That's for the lawyers to worry about. The important thing is when all is said and done, it's just the internet coming to the capital formation business. The market today is growing rapidly. Prosper is growing rapidly. The market, as many of you probably know, is segmenting by industries. So I represent portals in a whole bunch of different markets, in the life science market, a bunch in the real estate market, some in the real estate debt market, some in the real estate equity market, some in the distressed loan market, which is its own vertical. Represent a company called AppVested, which is in the mobile app business. So the market is segmenting, which makes total sense. There's a guy, now you're from San Francisco, so you probably haven't heard his name, but his big name in Philadelphia named Mark Andreessen. That's a joke. Everyone here knows Mark Andreessen, but he's often asked, how can other cities compete with Silicon Valley? And his answer is, they shouldn't compete. They shouldn't try to be the tech capital of the world. Instead, cities can become their own capital of some other market so that individual cities can have their own ecosystems for their own market, just as Silicon Valley has its incredible ecosystem. And that's sort of how crowdfunding is developing. These individual vertical markets, each with its own ecosystem. The way, again, I find it useful to think and talk about these things is stores. So think of a patch of land, which is here today, as a store that sells short-term real estate-backed debt. Think of Prosper as a store that sells consumer debt. There are all these stores out there, okay? We're in the very beginning of the creation of these stores. They're nothing like the mall that we're going to have 5 years from now. There are these individual stores out there, and when you think about all the stores, all the products that we can have, you sort of get an idea of where crowdfunding is going and how big crowdfunding will become. I mean, I personally have, because I'm on all sides. I'm a lawyer, I represent all different players in the industry. I'm also a crowdfunding investor. I see crowdfunding as just a huge, huge deal, a tidal wave of disruption. I think a lot of people are going to make fortunes in crowdfunding. I think that the best portals like Prosper and some of the others are the investment banks of the future, that 5 or 10 years from now they will be the big names in finance. I think it's like the opening of the American West, where suddenly you have all this land out there to claim, and it is being claimed as we speak. I think it represents the best of American capitalism, and I think people in this room are going to make a lot of money from crowdfunding. So I am super, super enthusiastic about the industry. I'm going to close here shortly, but before I do that, I do want to ask of you, as I do every time I speak about crowdfunding, I'm going to ask something of you, and that is this. Crowdfunding is a brand new industry, and it has this gigantic potential. And I hope that by the time you leave the conference, you are going to be thinking how you're going to make money in this exciting industry, and that you're going to be excited and you can see the way forward. But there are obstacles with crowdfunding. There are a lot of people who would like crowdfunding to fail. Okay, and those people range from the very skeptical who believe crowdfunding is just about you guys and me and my clients, cheating people out of their money. There's a big group of people like that. I would like to prove them wrong. And then there are a lot of other vested interests, okay? As crowdfunding becomes bigger and bigger, this is the internet coming to the capital formation industry. The internet displaces middlemen. Well, the middlemen in the capital formation industry are a very, very powerful group. Some of them are going to get on board, okay? But by definition, just as not every bookstore could remain open after Amazon came on the scene, by definition, not everyone in the capital formation industry can stay in the capital formation industry or make as much money as they do today once crowdfunding really gets going. So there is a large constituency, and it will become a larger and more vocal constituency that will, at some point in the not-too-distant future, be clamoring and using its substantial political power to put the brakes on crowdfunding. I guarantee you are going to see that. The way that we're going to empower the critics of crowdfunding, there's really two things, two obstacles that I see to the sort of rapid and happy growth of crowdfunding. One is if crowdfunding just becomes another Wall Street vehicle. If the platforms that are doing crowdfunding, if the portals become merely originators for Wall Street institutions, I think that is going to have a very, very negative effect, because I think once the consumer gets the idea that the game is rigged in the institution's favor, you think about REITs. Well, REITs were supposed to be a great opportunity for retail investors, and it sort of didn't happen that way. They were taken over by Wall Street institutions. There's a great temptation if you're in the crowdfunding industry, let's say you are a portal, a debt portal, a huge temptation to be basically taken over by institutional dollars, because the dollars are so huge. You know, you're trying like heck to sign up individual retail investors, and the guy knocks on your door and says, well, here's $500 million. Okay, you're in business, you're trying to pay the bills. That's tough to turn down. And if that guy who's writing the $500 million check says, you know, in exchange for our capital, you know, we'd like to see your deals first. We'd like to have the first cut at your deals. Or even, you know, because your transaction costs in dealing with us are less than in dealing with retail investors, we'd like to get a better deal. It kind of makes sense from a business point of view. It's tough to turn down. But if we go off, if we take that fork in the road, that's real trouble for the industry, and also even for that portal, because although you certainly get something short term, you get the $500 million check. If you become just an originator for hedge funds, it's not really a high value business. If you're looking for an exit, you know, if you're looking to make a lot of money, being an originator for somebody else versus being the investment bank of the future, those are two very, very different valuations. The second obstacle, and we see it unfortunately in the market today, is that not all of the portals out there are doing a great job with transparency. They're not all doing a great job. If you know, I've been doing this for decades, so I've read a zillion private placement memos, and I'm a numbers guy, so I analyze deals. And if you look at some of the deals on some of the sites, and even the very well-known sites without naming names, they're not very good deals, some of them, and they're not very adequately disclosed. I saw, just as one example, I saw a deal where a site was raising money for a third-party issuer, and the issuer was advertising an 8% preferred return. The site, for its investors, was taking a 2% management fee, okay, from its investors. But the advertisement on the site said there's an 8% preferred return. Well, there wasn't, because it was a 6% preferred return. It was just simple arithmetic. But things like that, some of the sites on some of the deals are, you know, just pushing the envelope. And again, we're in this business, crowdfunding, this is the internet, man. If you do something wrong, it travels at the speed of light. Everyone knows. And all it's going to take is a few bad deals for the public to become very, very skeptical about this business and go back to the safety of their mutual funds. And we have just thrown a multi-trillion-dollar opportunity down the drain. So I'm going to ask you, as you go out and crowdfund, just to bear in mind these risks. We're dealing with something new and fresh and promising, and we can all help make it work. And conversely, if there are bad actors, we can really ruin it. I know for our part at this conference, we are going to, the next speaker is Ron Super, who's the president of Prosper. We are holding him physically hostage until he signs in blood that Prosper will never give advantage to institutional investors. I'm actually saying that jokingly because we're not going to make him sign in blood. No, I'm saying it jokingly because he's actually going to come up here and tell you how cleanly and transparently Prosper conducts its business. They're a great, great quarter that way. But in seriousness, as you go out there, just try to do it right. The future is bright for all of us if we do it right. And either Andrea is just waving to me, or she's saying I have 5 minutes. So, but I'm going to, as I promised, I've given you a more or less data-free presentation. So I would take a couple questions, if we had time for a couple questions, if anyone has any questions at this point. There will be later today, some other lawyers and I will have a legal and regulatory panel, which I'm sure is going to be the highlight for most of you here, where we can answer some more technical questions. But if anyone had any general questions now, I would be happy to take them. Yes, sir.
Mark, this is Nikul Patel, and I have a question. In general, there is a lot of capital development happening in Asia.
Yes.
And if the Asian investor wants to put the money into the US deals, do they have to come through the Wall Street, or you foresee a world where they can directly participate?
No, they can definitely. The question is, how can Asian money participate in the US market? And that is actually a question I get asked all the time, because sooner or later, every portal is looking for Asian money because there's a lot of it. So the answer on the US side is very simple. They can invest. Portals in this country, crowdfunding portals, absolutely permitted to invest in US crowdfunding sites, either just through the regular mechanism, or we have this thing, the SEC has a regulation S, as in Samuel. I wrote a blog post about it a while ago. But it's very easy from a US perspective. It's the Asian country perspective, and not so much what we think of as securities laws, but as capital control laws. How much money the governments over there will permit their citizens to invest here. But actually, I mean, if you unlock that door, that's one of the key doors to be unlocked, because once those trillions of dollars start flowing in, fantastic. Anyone else? Yes, sir.
In your experience, do you find that the growth with crowdfunding is going to come from sole proprietorships or from
You mean who's going to be raising money?
Yes.
I think everyone's going to be raising money. I think that, in my experience in this industry so far, a year ago, I never got calls from people wanting to raise money through crowdfunding. Okay, it just hadn't permeated anyone yet. Today, I get a fair number of calls, but people who call still have the sense that this is a funny thing. What is this crowdfunding? This is a strange, it's like going through the, sort of the locked door, you don't know what's behind there. So it's still a strange thing. If you talk about it at cocktail parties, you can feel cool, right? No one else really knows about it. The answer to your question is, within 2 years, 3 years, everyone who is raising money for anything will automatically think about crowdfunding. Crowdfunding is not an exclusive way to find money. You can put yourself on a crowdfunding site and still be going around and, speaking with investment bankers and friends and family. So within a few years, maybe 2, it will be completely mainstream, and everyone, from the sole proprietor to, someone raising $500 million of equity for a gigantic real estate deal, they will all be doing crowdfunding. Do you disagree with that, Richard?
It's going to be ridiculous. The average firm size raising today is 2.2 employees. It's very much 1 to 3 people in operations, but it's going to, in some sectors, it already is the default mechanism people think about.
Yeah. And it's, as Richard said, it's moving up market. I mean, I have a number of clients who are going to be coming online shortly, huge real estate developers whose smallest deal is $100 million. But they're saying, as they should, hey, we're always looking for money. Why not expand our capital pool? So that's where it's going. Okay, I think I've overstayed my time. Thank you very much, everyone.